Good afternoon, everyone. Thank you for joining in. Welcome to India Factoring Finance Solution Chat Show, Factoring One Stop Solution for Your Global Aspirations. I'm Reenu Bilwada, Assistant Vice President, Relationship Team West, India Factoring and Finance Solutions. I'm your host for today, and we will be discussing about current economic scenarios and working capital solutions for businesses. Before that, let me introduce India Factoring to you. India Factoring offers working capital solutions through factoring products aimed at converting your receivables into cash. The company is a subsidiary of a European bank, Fimbong Bank Malta, and is registered with RBI as an NBFC factor. India Factoring is also 83 category authorized dealer. Through our global network, we offer one-stop shop solutions around the receivable finance. Now, I would like to take this opportunity to welcome our eminent speakers for today. Our speaker for today is Mr. Sanjay Borade, Head Trade Finance at a prominent private bank in India. A chemical engineer from ICT Mumbai and alumni of IIM Ahmedabad, Mr. Sanjay carries with him diversified experience of more than 20 years in corporate banking and trade finance. During his career, he has had multiple achievements, one of them being awarded Asset Award for Structured Trade Finance Deal in 2019. Prior to working in the current organization, Federal Bank, Mr. Sanjay has worked with other prominent banks, including ICICI Bank, Standard Chartered Bank, Development Bank of Singapore, and IndusInd Bank. Welcome to the chat show, Mr. Sanjay.
Thanks.
We are looking to have an insightful discussion with you.
Thanks. So, Renu, thanks for the nice introduction. And good afternoon, everybody. First of all, let me thank the India Factoring team for inviting me on this chat show. I think it's a great honor for me to be here and share my views with you all. Thanks.
So, our second speaker for today is Mr. Vinod Vasan. Mr. Vinod Vasan is a seasoned in factoring and trade finance professional with a demonstrated history of success in the financial service industry. He has over 15 years of rich and insightful experience in trade finance with an expertise in trade product, deal structures, and guidelines. He is with India Factoring over a decade, currently working as head relationship for Tamil Nadu state and as an elevated responsibility heading Telangana, Andhra Pradesh, Kerala states as well. Prior to joining India Factoring, he has worked with various factoring and trade finance institutions. He has also worked in London for various marketing companies who undertake marketing campaign on behalf of major banks in UK such as Barclays, NatWest Bank, etc. So welcome to the chat show, Mr. Vinod.
Thanks, Renu. Glad to be here. Hi, Sanjay.
Hi. How are you?
Please note the views shared by our speakers are their personal views and do not represent any particular organization. So, before we start off with the chat show, I would like to tell our viewers that we will be taking live question answers during the session, and you can put your queries in the chat box below for any queries that you have regarding the particular topic. Okay. As we can see in the last few weeks, global economy is increasing at a risk of sliding into recession. Last month only, IMF had cut down the growth rate to 3.2% from 3.6%, which is further expected to go down in 2023. There seems to be a rebound in FY21, but with the war situation, it actually FY22 was quite slow, and the reason can be given to the soaring inflation and the increasing cost of borrowing globally. So today we will be discussing impact of all this on the Indian economy and Indian exporters, and what are the tools available for the exporters to safeguard themselves. So in this regard, Mr. Sanjay, my first question would be to you that post-pandemic and a good rebound in 2021, FY22 is not as a good year as it was supposed to be. So, however, and also these 6 months of Ukraine-Russia war has feared spark of recession in the global economy. What do you think would be the impact on the Indian economy and the Indian exporters of this?
Okay, definitely. Renu. So, before I answer this question, I would like to inform everybody The views given by me here will be my personal views, and it's not of my organization. So, having said that, let me come back to the question which Renu has asked. Now, before understanding the impact of the Russia-Ukraine war, let's understand the importance of the Russia and Ukraine to the global economy. Now, coming back to the Russia, Russia is the prominent member in the global economy from the contribution at various fronts. If you look at Russia economy, Russia is one of the top three oil producers in the world. Is the second largest oil exporter in the world. Other than that, they are the largest producer of wheat. I think 20% of the wheat exports is done by Russia to the entire world. Other than that, they have also producer of a lot of metals, minerals, agricultural products, chemicals, all those things. So from that perspective, it really has a major impact on the entire global economy. Similarly, Ukraine also has one of the largest producers of sunflower, wheat, and obviously they have been exporting to the various countries. So if you look at all these things put together, obviously the Russia-Ukraine war definitely has a lot of impact on the entire global economy. As you have mentioned, Renu, last year post-COVID, obviously there was a rebound in the entire economy. You could see a lot of growth happening. In fact, our country also grows at more than 8%. But post that, with this war into picture, there have been obviously a lot of issues which have cropped up, and because of the war, obviously there has been disruption in the supply chain and the exports which are happening from Russia to the various countries, and it really had an impact on the overall scheme of things for India as a whole. If you look at the India-Russia trade corridor, if last year numbers, if I look at around Russia had exported goods worth around 9 billion to the India, and we had basically exported goods worth of 3 billion to Russia. And with this change in the dynamics, I think there have been a lot of positives for India per se. I would like to share here. One of the major things is on the oil front. If you look at during last 3 4 months, there has been a lot of oil has been imported from Russia, and probably at a much discount. If I look at some point of time, I could hear that the per barrel discount has been up to $27 for the oil import into the country, which basically definitely has an impact on the oil bill for the country, and that would have a definitely impact on the deficit which country may probably have during this year. So that definitely has an impact. Similarly, because of the reduction of the wheat export by Russia, India could get an opportunity to do wheat export all over the world. So this year the contribution of wheat export by country has gone by 10 times as compared to the previous year. So that's a big positive for the country. Similarly, on the other fronts also from the Russia-India corridor, there have been inquiries of the exports from India to Russia. So overall, that's the scenario is looking positive from the India perspective from the export side. And after the SWIFT mechanism being banned for the Russian banks, both the countries are working towards the settlement of the payments through other mechanisms. Recently, there has been a circular by RBI for the settlement of international trade in rupee terms, and both the banks at both the end are trying to work out the mechanism where both the settlements can happen in INR terms. And primarily, if you look at the oil import, which has happened in the first quarter of this financial year, it is more than 9 billion, which is, if you look at more than what we had what we had imported from Russia during the last entire financial year. And in order to basically have this mechanism in place, Russia is trying to promote the import of the goods from India to that country, which for me looks like a very positive phenomena from the export growth perspective for the country. So overall, I so it's a very positive thing for the Indian economy for the from the export growth perspective. So this is what I could gather from the in the current scenario.
Okay. So, Mr. Sanjay, if we consider, so this you said is a very positive impact on the export point of view. But if we consider from the Europe market and the US market perspective, in the Europe market now, because the winters are coming and they are going to face the gas shortage, and maybe the companies would have to cut down on their production. So from that point of view, and in US, there is a chances of like they're saying that because Fed wants to curtail on the inflation, there are chances of inflation. From those two market point of view, do you see any impact in the export
So
point of view?
definitely, I think I talked about India, but definitely there will be impact, and we have been seeing impacts happening in the European
Yeah,
markets because of the shortage of the oil and the disruption in the supply chain point of view. You could see the rise in the fuel prices. You could see it will be cascaded to the increase in the transportation cost, logistic cost, and which basically has led to the rising inflation all over the globe, which will
right.
definitely have an impact on the growth prospects of both the countries, whether it's US or European economy, because the overall contribution of Russia on the export front is very high on both the sides. So that will definitely have a negative impact on the other economies as well in the near future. So the, so whatever is positive for India, probably it may not be good for the other economies at this.
Understood. Yeah, okay. Right. Yeah. In this only, Mr. Vinod, I will ask you that second half of the year is generally a good time for an international business. This year, the demand hasn't been that good, and there have been few postponement of the shipments also for a lot of exporters, which are basically exporting to US and Europe. So, how do you see the demand for Indian exports for the next 4 to 5 months, like for this particular year?
Yeah, sure. So here, if you see, as Sanjay mentioned, there is a global slowdown in all the industries, and specific to industry wise, it varies. And what we are very closely monitoring various export buyers. If you take retailers, we are on close watch on the retailers. That is where we can quickly get the market information. So most of the US and the UK retailers, they have reported their inventories are moving slow. This is obvious because due to the consumer purchase, it is moving in a slow phase. In the meantime, there are other positive points as well, because one way, due to inflation and geopolitical situation, the Europe and the USA economy is going slow. But order book position, still our exporters are managing reasonably well, because due to China plus one policy, there are various orders now started routing through India. In addition to that, our neighboring countries, those are our competitors. Now, we have seen there are some economical, political related uncertainties going on in our neighboring country as well. So
Right.
overall, our exporters are getting benefit. Though the market is slowed down, the order book position is going down compared to the target level. But still, due to other aspects, are benefiting our Indian exporters. One is the China plus one, and our competitor countries orders also our people able to get it from the exporter. And the third part is now due to the input cost, the raw material price is increased in all the commodities. So what we are seeing is the export value automatically it is going high, up to not 20 to 25 percentage. So even the order value is the quantity of export what they are doing is at the same level, but they are getting hike in the price of the overall sales turnover. So these are the combinations are happening all over, and textile, each industry wise it is getting recovery in a different phase. So coming back to your question, how the next 4 months will be there. So what we are seeing is definitely there is a slowdown. Even our commerce ministry also mentioned the aspiration target of India export of 800 billion maybe challenge for 2023. But reasonable volume of export is definitely achieved by Indian exporter, and especially in the textile and electronic goods segment, we are seeing this year-end sales. Our exporters are very confident because due to the festival and other market, the market will pick up again. So overall, though there is a slowdown, but still there are various other factors benefiting our Indian exporters, due to which the reasonable amount of export volume is expected for the current year.
Okay. Yeah, rightly said, Mr. Vinod, that even if there is a turmoil that you can see in the global economy, but then Indian exporters are getting advantage of other factors, and we are in a much better position than the other countries. Yeah. So, in continuation with the same, Mr. Sanjay, so according to you, which all industries do you see that are going to benefit or are going to impact it with this turmoil in the global economy? And
So,
especially if I say, sorry, if I say from more from an India point of view, that which all industries in India will do that. Yeah.
okay. So from the global turmoil perspective, if you look at because of the Russia and Ukraine war and the recession which we all are anticipating in the next whatever 6 7 months in this case. Now, if you look at right now, the inflation rate in US is more than 9%, which is like which has happened after 40 years. I think the similar rates have been seen in 1981 or so. So I think because of that, obviously there has been a lot of reduction in the consumption side expected in the US economy. And obviously, US. Why I'm talking about US because US economy contributes maybe more than around 25 30% of the global GDP. So its impact on the entire global economy will definitely be there in this entire recession time. So from that perspective, what I see the with this high inflation and the increase in the interest rate by the Fed, you are going to see a lot of reduction in the consumption by the consumers in US and other economies as well. And similar things you will observe all across the all other thing, because that will definitely will have an impact on the industries. Now, from the reduction perspective, if you look at for customers, if they are looking at the reduction, it will be primarily will be on the discretionary side by the consumers, and the corporate side it could be again on the so-called not so required kind of a things at the in the current business model. So I would like to say here that the industries which are in the luxury segment or which could be in the non-consumer segment, those will definitely get impacted during this situation on a negative side. And on the corporate side, because there will be a reduction in the expenses, so there could be impact on the IT and ITS related kind of an expenses on the global part. So we could see some negative impact on these industries, and hence those factors will have to take into account.
Okay. Yeah. Correct. So, Mr. Vinod, your views on this? That how do you see any impact? Which all industries do you see an impact on?
Yeah, as Sanjay mentioned, mainly the luxury industries are going very slow, and all the essentials are doing well because these are the things people have to purchase. If you take all the essential item or in a good phase, and also the opportunity wise, due to the Europe energy constraint, there is a natural energy like a windmill component exporters. They are doing well because Europe is promoting lots of natural energy related projects. So we expect these kind of the alternative things to improve. And also we are seeing a good improvement in packaging industry because now Ukraine was participating in a huge packaging market. So now that is routing through India. Similarly, various opportunity wise is more, and the industry affected is more into the luxury segment, And overall, there is a definitely even the essential segment also there is a downtrend, but it is a manageable trend is going on at present.
Okay, yeah. So mainly, like we can say that the luxury segment of the where people have to spend more, or the expenses where people can cut down because they are not necessary. Those are the industries which are going to get impacted, and it's the necessity or the essential goods or the retail segment which is going to do better in this.
Correct.
Great, yeah. So my next question, Mr. So okay, so before we move ahead, I'll take my next question. That is from Mr. Vinod Chaube. Hi Sanjay, Russian economy has suffered from sanctions, other restrictions. Ukraine is under attack from Russia. Whether Indian exporter in agri products can benefit from food grain shortfall due to Ukraine-Russia conflict? Is there any increase in exports of agri commodities from India since war broke out?
Okay, definitely. Just I had mentioned, uh, see from the Russia perspective. As I said earlier, Russia is one of the largest producers of the wheat, then on sunflower and other crops as well. So post this Russia-Ukraine war, there have been halt. There has been reduction in the wheat shipment from the Russia as well as from the sunflower from both the countries, which definitely has given advantage to India in the agriculture commodity side. Which, if you look at the numbers of the wheat export from the country, it has been highest in the last 1 decade. So that has definitely helped us to increase the export of the agri commodities. Second, other important aspect is the tea export. So there has been demand from Russia on tea export as well, because India is one of the major producers of the tea in the world. So that is also is going to increase. And from the edible oil perspective, obviously we have been always in the net importer for the edible oil. So from that perspective, we are looking at the various substitutes. So I don't see any major positive for us because of this war on the edible oil. There has been, obviously you have seen a lot of price hikes in the edible oil segment in the last 3 4 months. But tea, all these commodities will definitely see a positive side.
Okay, thank you, Mr. Sanjay. Yeah. So now my next question to you, that due to China plus one strategy, like Vinod also mentioned earlier, a lot of new opportunities are there for the Indian exporters. How can Indian exporters take advantage of present supply chain crisis in the world while continuing to minimize their risk?
Okay. So before I talk about the advantage or opportunity which India has because of the China plus one phenomena. So let's understand what has happened in that, because I think US, Japan, they were trying to basically look at the strategy for a long time, but it hasn't happened during the last decade. But if you look at the recent past, last 2 3 years, there has been a lot of momentum. A lot of things have happened on this front, and the reasons for those are as follows. One, definitely the geopolitical tension between China and Western world. Second, the increasing uh, 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 the increasing labor cost in China. Third factor, and which is important in the current scenario, is the zero COVID policy, which is adopted by China, because that has led to a lot of disruption in the industrial production and as well as in the logistic front, which has led to delays, which has led to shortages in supply of the goods to the consumer on the other part of the world. Fourth important point is the changes in the personal information protection law, which has been introduced by China during last year. And this law has lot of restrictions and hefty fines for the companies who are operating in China. So because of these 3 4 factors, there have been obviously a lot of basically movement which is happening from China to other part of the world. Unfortunately, at this point of time, India has not received any major benefit on this front. the major beneficiaries in this current scenario is EU, Mexico, Vietnam, all these countries we have seen. In order to get this benefit of this phenomena, probably we as a country have to look at certain important parameters. Because when China became the major export hub for the world, they definitely looked this as a major business opportunity for India. Being an large consumer economy, I think here we still look at domestic market as the major a major consumption center, and hence the target market for any new industry. But if you want to grow as an exporter, we will have to target this opportunity in a big way and in a focused manner. You can't basically play with the opportunity available in the domestic as well as export market. So because the growth and the success which China has achieved is primarily because of the four parameters. One is their low cost of production. Second, the quality of the goods. Third, the sustained supply, and fourth is the reliability. Now, in order to adopt this strategy and become successful, we'll have to have all those four things in place. And there have been some important initiatives which the government has taken, like PLI scheme, which
Yeah.
we which will definitely help you to have the export avenues in place. And in order to get those things, we will also have to create a supply chain which basically support this entire production and the logistics and movement of these goods. And third important factor also the investment, because when you're trying to create a large manufacturing centers, the investment required will be huge. So those commitments need to be there when you're trying to get into this strategy. Fortunately, obviously, we do have an physical as well as technological skills available in the country. So that combination has a very positive impact for our country. But in order to be successful in this strategy, all other parameters should be looked at. So I think that is what we should aim for.
Correct. And in terms of, I think manufacturing regulatory checks also has to be little loosened up by the government. Like they have started with the initiative of Make in India, which
Yeah,
should promote this more. But then, yeah, some checks and balances have to be loosened up by the government, and little bit more incentives have to be given to the manufacturers.
yeah,
That's
I think more than incentives, also the overall processes to set up and
correct.
clearances. Or I think those we have been discussing about one window clearance kind of a mechanism. I think those initiatives needs to be replicated all across the country and in all the centers, so that people the new factories manufacturing setups can be done in the low time.
Correct. Even with Apple setting like making iPhone 14 in India now with their announcement, let's see how it goes, because I think once that becomes a successful, or it will set an example for rest of the industries also, that
Yeah,
how
yeah,
it
definitely.
we are
Yeah,
able to
definitely. I think that could be one major example which will have which will showcase our.
impact on the international market.
Yeah,
Correct, correct, correct. Yeah, thank you so much, Mr. Mr. Vinod, now that like exporters have this much of opportunity, and there is a lot of other kind of opportunities also that they're getting. So, what are the different types of working capital products through which the financial institutions can support these exporters to grow?
Yeah, there are various type of working capital finance available for the exporters, starting from purchase order finance. When they get a purchase order, they can avail purchase order finance and packing credits. It's a advance payment, and also post shipment finance, and various instruments, also letter of credits, bank guarantee, various sources of trade finance facilities are available. And as you mentioned, during the growth scenario, the post-shipment finance, and especially, I would like to talk about factoring when it comes to post-shipment, because when the company is into growth track, the prime requirement is the cash flow. So without cash flow, the growth will get affected. So the factoring plays a major role in improving the cash flow of the company. So and also it is not secured. The receivables are completely secured. There is no collateral security required for the arrangement. So the many exporters they avail combination of facility. It means they get pre-shipment finance from bank and post-shipment finance from factoring company. So one is a secured finance arrangement. They get it from the bank, which is a pre-shipment. Another is a unsecured arrangement from a factoring company. So they can avail all in a combination of products as per the requirement. And there are various trade finance facilities are available from banks, NBFCs, and fintech companies as well.
Okay. And Mr. Sanjay, your views on this, that how, like, what all products can the financial institutions give to the exporters to, like, to help them with the take better advantage of the opportunity?
I think Vinod has covered the ground very well on this product, but just to add some few points, obviously there are two ways generally you look at doing financing for any export-related activity. From a banking perspective, you do financing where we you with recourse kind of a deal, where basically the recourse comes back to the borrower or exporter in this case, and you do kind of a pre-shipment, post-shipment finance kind of a stuff. And obviously there has been a the old-fashioned STL, uh, short-term loan, CC facilities, which are always available. But I think people have been moving, and they need to move towards the transaction-oriented facilities. That's where I think the kind of bill discounting facilities will come into picture. Then also there could be a trade credit facilities where you try to do the discounting of the LCs which have been received from the overseas party. There have been possibility of doing the open account financing through co-acceptance route within the banking parlance. So I think these are the facilities where you basically have an recourse to the borrower while doing while providing such instruments. The second aspect is now basically looking at the off-balance sheet structure, where basically you uh, do not rely only on the credentials uh, or the balance sheet of the exporter in the country, but you also try to take the help of the buyers in the overseas market and try to work out solution which will help the exporter in the country to avail financing, because uh, at some point of time, because of the inherent nature of the business, or because of the financial situation of the borrower, he may not able to avail the required finance using his own banking or his own credentials in the same. So that's where you try to work out arrangement in the way the factoring operates, where you take an basically recourse to the buyers in this case, try to use the credential of the buyers and avail and provide the facilities to the exporter. Now you do factoring in traditional way. You have an factorature international mechanism. You try to use that. Now in the during the last financial year, RBI has also come up. IDA has also come up with the trade insurance policies, where the banks or the financial institutions can provide the post-shipment financing using the credit insurance route on the buyers. So I think these are the new mechanisms which can be used to provide financing to the exporters and help them to grow their business in the global markets. I think that's all we can look at right now.
Okay. So, with the global cost rising right now for the borrowing, do you see any challenge in terms of the rising cost for the borrowers or for the exporters in that way?
Yeah, I think during the last 6 7 years, we have seen a lot has happened on the interest rate scenario also. If you in India, when we moved from a LIBOR regime to a SOFR region in the month of January, the SOFR was in the range of 20 basis points, something like that. As we speak today, it is more than 3%. So that is the benchmark that we are talking about. So overall, there has been uh, upward movement in the interest rate all across the market, and I think it is going to stay there for some time with the all other factors put together in the growth aspect, inflation, all those things. I think there have been efforts to keep it that way to basically curb the inflation in the global market also. I think this will continue for some time.
Or something. Okay. So then they have to see, a borrower would have to see a mix of a pre-shipment and a post-shipment finance, and I think where factoring comes into play for them is also where helps them take the concentration risk out of the picture. Like they can take more call on a particular buyer, and
Yeah.
because it's non-recourse in nature, so there it helps them grow their business as well. Yeah.
So
Uh,
definitely,
yeah. Sorry.
sorry, just to add you, definitely from a finances perspective, it is for them. It is not just concentrating their book only on the seller. Obviously, they will able to take a comfort from the credentials of the buyer and try to have a book which obviously have a more granular in terms of movement.
Yeah,
Correct. Correct.
Renu, to add some more point in this matter, the exporters through factoring, it is a non-recourse. They are completely covering the buyer risk. Also, any new orders when they are approaching with the buyer, they can check the credibility of the buyer. So based on the in case the factoring company suggests them the buyer is little higher risk and they should not go for this much value of export quantum, they can take necessary steps. Maybe they can reduce order or get advance payment, and accordingly they can manage it. So the factoring is not only the finance arrangement, and it comes with holistically various benefits. One is that non-recourse arrangement, and if the business grows, the limit size also he can immediately increase because he can approach the factor, and once the insurance cover is available, they will put it under non-recourse and he can peacefully do the business. And finally, the exporter no need to worry on the buyer credit worthiness, monitoring the buyer how their performance quarterly. I know this worries are completely taken over by the factoring company. So the exporter can concentrate full fledged on his core business to growing the business. So remaining parts he will completely offload, since once you sell the invoice to factoring company, he is completely offloading the risk to the factor, so he can peacefully concentrate on the business.
Yeah. So I think Mr. Gurinder's question was in the same line, which I think we have answered. So I'll take up the next question, which is one of
To
the main. Sorry.
Renu, just to add one more point on the
Yeah. Yeah.
pricing,
Please, please, Mr.
because
Sanjay. Yeah.
from the SME side. So from a in the current scenario, obviously SME PC has been growing, and obviously because of the balance sheet and their financials, they may not able to avail the financing at a cheaper rates. But I think that's where when you look at the solution like factoring through trade credit insurance or through a FCI mechanism, that's where the financials also basically look at the risk is being gained transferred from the borrower to the other party, and if that party happens to be a more credential and with a better financial, there could be possibility of they offering offering the better facilities in terms of the pricing for these guys also. So I think that could also help these guys.
Yeah.
True.
Thank you.
So enough funding could be a costly affair for these guys.
Yeah, rightly said, Mr. Sanjay. Correct. So one of the major questions. Okay. So I'll take up the next question, which is again by Mr. Vinod Chaube. Hi Vinod, under the current geopolitical situation, whether the insurer and underwriters have taken a conservative and a cautious approach, or they have a confidence in the market and they continue to support trade and commerce.
Yeah, so we are dealing with the various insurers globally, and what we are seeing is they are taking a calculated measures because they are very closely monitoring all the buyers' performance, and but they are very confident. Some of the U.S. insurers we had a direct talk, and they mentioned there is a slowdown, but still the market-wise they are very confident, and we are getting a good credit insurance for our exporters. And even recently also there is a inflation level slightly it's gone down in US market. So various positive signs also they are seeing the insurers. So their call is basically buyer to buyer wise, so they have a very updated information. As we all know, US is a very advanced market, and all the information about the buyers are very much available in public domain. And also, especially if you take India factoring, we deal with our counterparty banks in a local country. So these banks are leading banks in a local country of buyers, and they get a complete understanding of buyer, and they are confident of giving credit insurance on buyer.
Okay. Okay. I hope that answers Mr. Vinod's question very well. Mr. Sanjay, now I'll take up the one of the main questions that everybody keeps speculating, and I think everybody wants to understand that in this market situation, how do you see the rupee movement, like against major currencies like USD and Euro, because dollar is becoming stronger and there is a depreciation of rupee, but then how do you see it happening in future?
Okay, so honestly, I'm not an economist, but I will still try to answer this question. Okay,
Sure.
so if you look at both the geographies in an isolated manner, so whatever we have seen US, the inflation is at peak right now, and obviously, therefore, people have been looking at cutting down their expenses, and therefore the Fed has also increased the rates during last 3 4 months, which basically have put the US economy in the higher interest rate regime, which basically means that most of the FIs, FPIs, all those guys will try to put money in the safer havens as compared to the other emerging markets put together, which means there could be an outflow of the US dollars going going to that country bank. Uh, we as a bank, as a central bank of the country, RBI has been trying a lot to keep the US INR exchange rate in check, not crossing 80. But if you look at from the overall direction and the futuristic perspective, with all this phenomenon of money going by, inflation, saving going down, all those things, we see the further depreciation of the INR, maybe in on 81, 82 level in the near future. So that will definitely happen. Now coming to the other economy, which is the Union. Uh, European Union obviously has its own challenges in terms of the growth rate, the overall geopolitical mechanism, and second point, with the Russia-Ukraine war, there has been obviously pressure on the fuel cost, supply, and obviously having an overall cascade from the logistic cost also. So therefore, the things are not looking great for the euro as a currency, and that's why you would have seen the euro currency is obviously getting depreciated vis-a-vis dollars. And right now, if you look at it, has been hovering in the range of 0.9921 for last 1 month or so, and probably it will further go down to a level of probably 95.95, 0.96 levels in the near future because of the all the reasons which I mentioned. Other than that, if you look at other major currencies, if you look at JPY, in the current scenario during this war as well as the inflation, all these things, we haven't seen much impact in the inflation rates in the Japanese economy. It is still in the range of 2.1 kind of thing, which was with earlier case also. It is because of the inherent nature of the Japanese economy, which basically looks at saving as an important aspect. So therefore, we haven't seen much movement in the Japanese yen, and that will continue to be there still year end because I think whatever numbers and the data coming from Japan, it continues to say that they will not change the interest rate scenario. Their inflation will be in the same range for the next 6 months or so. So I think that covers the major currency movement in the near future.
Okay. And but if you see it from an exporter point of view, then it's a benefit for them, this particular depreciating rupee, and then
Yeah, yeah,
how.
definitely for the exporters in the country, it's a very good scenario to be in because obviously they have
Yeah.
seen the movement of US dollar from 74 to 80 levels within a span of last 6 months, and obviously you could see the overall growth. But at the same time, obviously we are also net oil importer country. So that obviously has an effect on the other side of the balance sheet.
Right, right. So as a country, we might be at a loss, but then exporters would be at this thing. So it
Because
somewhere.
if you, yeah, yeah, because if you look at from the current account deficit, last 2 3 years number, last year FY22, the exports were in the range, export in the range of 420 billion dollars, and imports were in the range of 600 plus billion dollars. So we were
Right.
around, we had a current account, we had a deficit of 190 billion dollars. Similar was the case in 1920, where the deficit amounts were in the range of 100 plus billion dollars. So that being an net oil importing country, that will always basically have an uh, negative connotation for the dollar.
Correct. And mainly from the domestic market point of view, it is going to affect us in terms of higher inflation with
Yeah.
this particular going up. Yeah. Okay. Mr. Vinod, any like you want to share your last views on this before we close the
Yeah,
chat?
it's fully covered by Sanjay. Maybe I can add some more points into it. One is, as you mentioned, exporters are, taking some advantage on the rupee, depreciation. And if you see, various exporters, they do imports as well. So there, the cost is going high. Their overall input cost is going high due to that, and some portion, they are getting benefit out of it. So it is a balance, both the side our exporters are doing. And also, if you see the other currencies depreciating, how much depreciating against USD, our depreciation level is not not much bad. So overall, our currency, what our commerce ministry also mentioned, our currency is need to be considered, much more stable compared to other how other currencies are depreciating against USD. So in overall, this is a balancing thing. So as you mentioned, this will get consolidated in some short of time.
Okay. Yeah. So thank you, Mr. Sanjay, and thank you, Mr. Vinod, for such insightful discussion. It was pleasure having you guys on the show, and we would look forward to having such more discussions with you in future. Yeah. So thank you so much for joining us. Yeah.
Thanks everybody.
Yeah.
Thanks, thanks everyone.
Yeah. Yeah. So thank you everyone for joining us. If you want to know more about factoring, you can get in touch with us at our LinkedIn page, YouTube, or reach out on the contact details shared on our website, www.indiafactoring.in. We will be back with another interesting chat show shortly. Until then, signing off from you all, your host Reenu Balwara. Thank you.